Did you recently buy an asset and you used a trade-in to get it? You're wondering, how do you enter that into QuickBooks? If we've never met before, hello, I'm Candus Kampfer, and I love to help business owners and bookkeepers create confidence with QuickBooks. If you are looking for the desktop version, go up above or down below. I will link one there for you. If you're looking for the online version, you are in the right place. The online version of QuickBooks, that is. So when we talk about assets and trade-in, there's some things you need to know. First, I am not a tax professional. I cannot give you tax advice, but what I'm going to teach you today is the basics of what you need to know. You will probably need to check with your tax professional for a few variables that I'm going to explain to you. Sound good? Let me know in the comments if you're all excited and if this video helped you. All right, so first things first, we are going to be teaching QuickBooks Online, which I shared, but the thing you want to do is start with this right here. It is kind of a guide or an outline of exactly what you're entering into QuickBooks. The reason I recommend this is because it's going to give you information you're going to need. And I want to explain what you need to gather together so you have it. First, you're going to want to know, in this example, we're buying a Ford and we're trading in a Ram for this example. Okay, so I got this from a Confidence QuickBooks owner. They asked this question, and this video is straight from my program, but I wanted to gift it to you here because it's a common question that I get asked. I'll share with you later if you're looking for more tutorials or how-tos about the program. So first, you need to know, what is the asset value? What did you pay for it? Okay, get the document. What is the total cost? One of the variables that you will be asking your tax professional about that you'll notice down here that I have is about taxes and license. Some of these things you might want to write them off instead of making them an asset. So let's do a little basic information real quick. I want to just do this for you. When you are buying a new asset and you're going to what we call capitalize it, you're going to put it as a fixed asset in QuickBooks, and then you're going to depreciate it over time. So instead of taking the whole expense up front, you're going to take it over a number of years so it matches the amount of income that you're earning. If you want to understand more about depreciation, I have a tutorial video. I will link it up above and down below for you. So let's look at this guide that we did. So we're capitalizing this asset. We're going to depreciate it over time. As I said, check out that video if you need it. So first, information you're going to need. What was the purchase price? Next, what was the allowance of the trade-in, right? So not what's in your QuickBooks, but what is the dealership or wherever you're trading in for giving you as a value of that specific asset? If you had a loan, you're going to want to know what the loan balance was and the interest, so we know the total that we had to put towards that, all right? Then you're going to want to know, that's going to give you your math, the $27,800 minus $18,613.51 will give you what's called your trade-in or equity into the asset that you're trading in. If you put money down, that you would put in here, okay? In this example, I don't have any, so it's 0, but you may have that as a factor. Then this will give you what is the balance of the asset. So if you take $78,594.95 and you subtract our trade-in equity value of $9,186.49, you'll get the $69,408.46. I want to explain this to you because when you have to punch in your numbers, I want you to know where this math came from, all right? On this example, we're just capitalizing all, we're not expensing any, so we put that 0 there. You'll need to check with your tax professional to find out what's best for you. The next factor you're going to need to know is the vehicle you're trading in, what is the value of it? So first, what's in QuickBooks as the value asset that you have in QuickBooks for, in this example, it's a Ram, it's whatever you traded in. How much have you depreciated? How much, because what you do with a fixed asset is you put in the full amount, but you write it off over time, as I was sharing. So in this example, it's $10,000, which gives us a book value of $14,921.58. You'll see where that applies later. Then what you're going to do is, this is what QuickBooks says, okay? Now we're going to take the trade-in that they gave us and we have to do the math difference, all right? So even though we had in QuickBooks that the value of the Ram was $24,921.58, the value they gave us on the trade-in was $27,800, which was more in this example. Then we have the book value, which we got from right here. We subtract that off and it tells us, did we get more money? Did we have a gain on it or did we have a loss? So this is something that you want to know. Traditionally, if you just buy an asset and then you sell it, you have a gain or loss on that one asset. But because we're using the value of this asset to trade in on the other one, it changes what's called our basis in QuickBooks. You'll want to check with your tax professional on this. My personal tax professional that I checked in with said, If you trade it in, then that gain on it it actually lowers your asset value. So the Ford that we bought for $78,000 in this example, we will have to lower it in the end by $12,000 because we took that equity and put it straight over. And so instead of having a gain or loss specifically on the asset, we're just lowering our next asset value. That may or may not be beneficial. So something you might consider doing, and this is kind of an after effect that you're getting this information because you probably are, how do I enter it in QuickBooks, but it already happened, yet you'll know for the future. What some tax professionals will recommend is that you actually just buy and sell one completely separate from the other so you have a higher basis for taxes. I can't give you tax advice, but I did tell you I'd give you some tips. So there you go. All right, so how do we add this into QuickBooks? I created a spreadsheet, a Google spreadsheet, to summarize it for you and to have our debits and our credits. So you can always use this as a guide. When we're looking at this, you're going to see we have the purchase price, which we're going to use when we create our asset in QuickBooks. We're going to have our loan balance, which is here. The loan balance comes from the purchase price minus what we had as equity. Remember the equity, this amount right here, comes from the $27,800, just as a reminder, even though I already said it, from the amount that we owed on the loan itself plus the interest gives us our trade-in value. And that is where this math comes from. And this will be what you got a loan for. Depending on if there's extra fees or not, yours might vary, but this is the loan amount. So you're going to see that's punched in over here, or I entered there. Then you're going to have your vehicle that you currently have in QuickBooks, the RAM. We have to reduce that by the value of it, remove the depreciation. We have to also remove the loan for the RAM and the interest, okay? So you'll see that we have that over here as well, the RAM, the depreciation, and that. Now, the one number they didn't tell you is the difference, which typically is going to be a gain or loss, but in this example, we're doing it as an asset. That's why you'll see I have a line here for gain or loss, but instead, we're actually reducing the asset value. So we're taking the trade-in value minus the book value, which I shared on the other screen, that gives you the gain or loss. If you need to speed up or rewatch this video to get all of those factors in for you, it's here. Just rewatch it. You can always click on the little wheel here as well with the video and speed it up or slow it down to give you exactly what you need. Watch it over and over again. I tried to give you all the details. So let's jump into QuickBooks now and see how to enter it. All right. So within QuickBooks, we're going to go over to the plus and we're going to do a journal entry. Now you can set up the different types of accounts when you're doing the journal entry, or if you want to do it ahead of time, if it's already been set up, you can go over to accounting and click on chart of accounts. Okay, I'm going to scroll down and I already set it up just to save us a little bit of time. The way I chose to set it up is I like to do, as you'll see here with the RAM, I like to do original purchase price and the depreciation is two separate line items. The reason is because then it gives us the value of the vehicle as a total. Your QuickBooks may or may not have this. It might have your depreciation entered. It may not even have your depreciation entered. Whatever you have in your QuickBooks, you're going to have to adjust the entry accordingly. I like it like this, but it's totally up to you. How do you make this happen? Well, what we do is you first set up your asset as a fixed asset and you name it and we put no balance, click save. Then we come in and we add another account, another asset, but we make it a sub account under fixed asset of the Ford. It's a vehicle is going to be the type, just like the Ford was. And then we're going to call it original cost. And then I just put Ford in the little brackets. And you can put the last 4 digits of the VIN if you want, but it's already below this. So it kind of already tells you that. Okay. If you've never set up an asset, I just want to let you know how to do it. You literally are clicking here, new, clicking on asset, and then walking through those steps as I just showed you. You create your fixed asset first, then you add your sub accounts if you want to. All right. The other account that we're going to need to set up is because we got a loan for, this one is we're going to have to set up a loan. So I already did that as well to save us time. What you do is just go up to new, choose liabilities, long-term. Liability is going to be the type of account. We're going to do as an other because we're not necessarily going to say it's a notes payable. And then I just titled it Ford, loan Ford. You could put whatever you want. If you have a company that you're actually paying it to, just enter that data in there. Oh, let me take my face off. It might have slightly been in the way. There we go. All right, so that's it. And you click save. So you want to set those up first. Those are all the new things that we have because we bought a vehicle. We have to add the vehicle into QuickBooks and we have to add the loan. Now we can do our journal entry knowing that the RAM and all the data is here. And you'll notice that these dollar amounts are going to match exactly what I have on my spreadsheet here. That's the purchase price. This is the depreciation. That is what you see here in QuickBooks, right? And that $14,000 is going to be what you see here under the original purchase minus depreciation book value. So you see I'm matching numbers. You want to make sure you always have a check and balance when you're doing your data entry. We're going to go over here to new journal entry. Hopefully you're taking some notes if you're the kind of person that learns that way. You're going to enter in the date that you sold your asset. You're going to come here and you're going to choose the first transaction that I have. The first one I have is the new asset. Because it's a debit, I always like to start with the debit. If you haven't already done it, you can add here and you just go in and type in what you want to call it and click add. I'm going to go and do the original Ford as the cost, as the sub account that we created that I showed you. I'm going to type in $78,594.95. And then here, I like to add my depreciation right away because it will save it onto each of the next transactions. So you could say purchased Ford and the VIN number that you have or the type of vehicle it is. You can add in, you could say trade in Ram. Okay, you can always change these things later, but you could put in where you purchased it here if you'd like. Then I'm gonna go to the next line and I'll look at my journal entry. I'll do the next one. The next one I have is actually the difference on how the math works out. So I'm actually gonna skip that one and I'll come back. I wanna actually do the loan for the Ford next. So you're gonna go here, you're gonna do your Ford loan or however you typed it. And you're gonna look at your amount that you actually got a loan for, $69,000. So you're going to put that in and it's going to be on the credit side because even though you don't maybe know debits and credits, that will be there. You know what? I will put a link below where you can actually download a little debits and credits cheat sheet that I created. If you would like it just as a guide, we'll include that for you as a little gift. You can just download it. All right, next we are going to go on and do the Ram truck and assets. So $24,000. That's also going to be a credit. That's actually removing the original Ram out of your QuickBooks. And because assets are usually debit based, we are going to do a credit here. So we're going to do the fixed asset. And the amount for that is $24,921.58. And you'll notice it keeps moving my description as I type in additional ones because I did it initially. Now we're going to remove the depreciation. And because depreciation is considered a contra account in QuickBooks, even though it's an asset, we are going to do a debit to reduce it or remove it because we have sold this vehicle and we no longer need it. So it's depreciation, but I put RAM because I like you. Not everybody puts their depreciation on individual lines, but I like to just to keep it really clean. It really depends how many assets. If you have lots and lots of assets in your QuickBooks, you might just be using accumulated depreciation, but either way, you're going to want to reduce it by the amount of money that that asset had been depreciated by to make your books match. The next one that we're going to do is the RAM loan. So remember, we paid the loan off. Loans increase with credits. So what are we going to do to remove it? Debit. Very good. Loan, liability, and the loan balance is $18,571.52. Now the next line item we're going to do is we're taking care of that interest that was an expense, right? So because it got paid off with the purchase and within the loan and the trade and all that, we're going to just add it to this exact transaction. We're doing it all at one time. So the next transaction that we're going to do is our interest expense. If you don't have an interest expense, make sure to add it. Now you'll notice it says interest expense and then expense. This is the type. I like to do interest expense versus interest earned in the title so you don't accidentally get these mixed up together. So we're going to go ahead and put in the total that were there. And now the difference is going to be if it was just one asset bought and sold, we would do a gain or loss. In this example, we're going to reduce the original asset because we're trading it in for that. Check with your tax professional to see how they would want you to do that, just to verify. So we're actually going to adjust the original Ford by, and you'll see that it actually did the math for us, $12,878.42 because it's the last transaction. If you've done all of your math correctly at that point, you'll be able to do that. They'll give you that transaction, so you just check the math to make sure it matches, okay? So that is where we took the $27,800, the amount that the dealership gave us on the trade-in, subtract the book value, which was, just to summarize how you do it, you take the original purchase price minus depreciation will give you the book value. If you've depreciated it fully, the book value may be 0. And then that becomes what we usually call the gain or loss, but in this example is the asset, movement of the asset. So we go ahead and put that in, and guess what? You save it, and that's it. You can also go here and just click save and close, which makes it even easier. Let's look at what happened inside of our chart of accounts. Remember, go under accounting, chart of accounts is going to be how you get here. So now you'll notice the RAM is 0 and the depreciation is 0. Now, let me check and make sure I missed something, and this is good. I'm glad that I gave this example because look at my 24,000 is still sitting there. So in my transaction, I probably put it to the Ram truck instead of the original. So I just want to check that real quick. So let's go back and look at our journal entry. I love it when there's like a little something that I get to teach you extra. Let's make sure, go here to the little, if you didn't know, to get back to your prior journal entry, you're gonna click here and you just open it up and you can look at it. Okay, great, so this is a good example. It zeroed the original, but the cost was different. So I was talking and not paying attention. I want to make sure I do original purchase. So I remove it from the sub account if you're using a sub account. Save and close it. Now when we come in, you really want to make sure you're checking it. Look at that, perfect. I'm actually glad that I did that so you got to see it. You want to be checking every one of these should be 0, not just the main, but the sub as well. Once you see that everything has been done the way you want, your vehicle has the original purchase, but then it has the adjustment in there that we talked about because of the value that we had left. We'll scroll down. So we have the original one here, and then if we scroll a little bit further, we'll go down to the loan. The Ram loan is zeroed out, and the Ford is exactly the amount we owe. So what you'll like to do to clean up your QuickBooks is make these 0 ones inactive, and when you make them inactive, you'll no longer see them in your list. It doesn't delete them. I'll actually teach you another little trick. I love to give you guys tricks all day long. I could sit here and we could hang out. But you could go in there and you're going to make that one inactive so you don't see it. If you ever want to find your inactive ones, you're going to go here. If you do the main one, it does the sub accounts as well. But if you ever want to find that inactive one, click on the wheel, click the inactive, and if you scroll down, you'll see it says deleted, but really just means inactive, and they're never truly deleted. All of the transactions are still there. If you want to make them active again, you just click make active. And that is how you enter in the purchase of an asset, removing an asset, and adjusting for it. Let me know in the comments if this helped you. And if you're new around here, don't forget to subscribe and like this video, and maybe share it with those anyone you know that needs it. And if you'd like to get these tips and tricks in your inbox every single time we send them, we do weekly tips and tricks, go up above or down below and I will send them to you. And if you're thinking, oh my gosh, this is one of the trainings inside Kampfer's QuickBooks, I would love to know more about it, check out our customizing QuickBooks workshop. Have an amazing day. Thank you so much for being part of my community. I'll see you soon. Let me know below. Did this help you? Did you get it entered? And was there any questions you had that I didn't share? Don't forget, I'm not a tax professional, so I might refer you back to your tax professional depending on what the question was. All right, have a great day. I'll see you soon. Bye.